Boom. We are live, ladies and gentlemen. Thank you for joining us today. Bitcoin in re-accumulation. This has been our sentiment, well, roughly for 6 months now, almost. Now, it's been always an interesting ride. We've said very early on of May, when the first kind of drop happened, that there was a high likelihood that this would turn into a re-accumulation process. How long that lasted was kind of not really up to us, but we're going to dive in, take a look. Here on Twitter, this is a fun one. This is one by a private Bear Den member who used some of our material in our educational section, and he overlaid Bitcoin's price and our educational chart for a re-accumulation schematic. Now, what's interesting here is understanding that these schematics are based off human emotion and a larger scale interest, right? So we had a huge run up into this $30,000 to $60,000 area, and a lot of people were expecting that you would see a bear market effectively. And technically, we've been in an accumulation market, which a lot of people would also maybe call a bear market. I like calling them accumulation markets because that is what you should be doing. If there's an asset that you like and it at that moment is cheaper than it normally is, especially if it's by a significant amount, it's usually a good time to be accumulating that asset. Most people think we're going to go lower. Although there is a potential for that, just off technicals, fundamentals, by how many large interests there are here would likely disagree. Which brought us to another fun tweet by Ki Young Ju. I don't know if I'm saying that correctly, but I like what he shared here. Some data from CryptoQuant, and I'm just going to roll in here and take a look at it. These are basically long-term holding averages, effectively, and the top end of distribution is signified by a massive switch, and we've been following that particular change over here much more closely into the percent of open Bitcoin on exchanges. I'm going to have to move my face out of the way here so we can see this chart. Okay, that should do it, I think. The reason why I think that this is so important is when you see accumulation of an asset, you're going to consistently see that asset leave the open markets. And this is the strength of, I guess, the supply being chewed up by the demand and being locked away. So when it doesn't start to come back, that's a bullish indicator for us. And so as we scroll out, we can see that around the $60,000 mark, we had this big chunk of supply come in. A significant amount, and then it was instantly chewed up. And we've actually not had a huge amount of supply come in, and the prices stayed relatively stable. This, to me, is also another indication of larger interests who have a significant amount of capital that can drive up and then push the price down into these now more and more illiquid open markets. Right. So again, the liquidity here is important because that's where the supply and demand characteristic usually drive price. So the other thing I thought that was kind of fun is last week we looked at the stock to flow ratio. Again, just recognizing what we're doing is looking at the observed risk to reward relationship. One of the reasons why the stock to flow ratio is fun is even though we're not using it for perfection, we can tell that the average price per Bitcoin should be somewhere around $100,000. Now, if we look at the reserve risk ratio as well, this is another good way, kind of visual way to see this. We're in an area right now, let's actually give ourselves some more data all the way back to the beginning of Bitcoin, where the cost of Bitcoin based off on the relative risk right now is actually in an area of buying as well. So there's almost across the board bullish indicators, both in fundamentals and technicals. Now, this is a bit too much of the chart to give us any really good indicator, as the price lines are a little bit ecstatic there, but even in the realized HODL ratio, we're right back down near the bottom. And as you can see, we'll go actually to 2017. Historically, you have big price run-ups and a drop. And in fact, we actually never really left. I'd probably better use a log chart. Maybe it's not log chart on this one. Let's go log and log. Yeah, that's a bit better. So we're actually still quite low. We haven't actually dramatically moved into the top overextension of the R HODL ratio. There's a few other ones I was looking at this week, the realized cap HODL waves, etc. But generally speaking, there's enough indicators to me that what we are witnessing is a reaccumulation schematic. So the only difference here I would maybe argue with Ki Young is Bitcoin accumulation phase begins. Yes, except technically speaking, I think it's a reaccumulation. The original accumulation that we saw for Bitcoin was effectively between 2017 and 2020. So One of the fun parts here is if we compare where we are right now in Bitcoin pink, and this is actually from a few weeks ago too, so you would notice that the price was still down at 34,000. We were talking about why we thought this was a really bullish moment based off other accumulation cycles and why timeframes in this particular function also don't matter. So this to me, again, is just further evidence that we are seeing a reaccumulation and that the best thing to be doing is focusing on just straight accumulation strategies of assets you're interested in. Now, again, remember, this is all about risk and managing and understanding how that works. We like highly risky ideas because the upside is still almost infinite. Bitcoin's much less risky. I mean, there are still some operational risks. You'd want to make sure you're taking care of security and paying attention to how you manage any accounts, etc. But it's not the same as when Bitcoin was back in 2017. And this is where we thought it was an interesting kind of parlay of ideas. We had mentioned briefly that was this an accumulation? And we think it's a reaccumulation. Again, this is and a very powerful one too. It's going to probably continue upwards after this for maybe a few years. I don't think Bitcoin's going to have the same volatility. I think you're going to see a longer, drawn out kind of stepping stone process upwards. Now that the bigger players are here, they just have a much more strategic purchase and acquisition plan than most average retailers. So you see it show up in the market this way as well. So here is the kind of accumulation process that we had been watching. And one of the reasons why we got so bullish is because we were looking for this reaccumulation process here. So again, seeing it take place, well, I suspect here is actually a really powerful phenomenon because it means we've totally cleared out all of this early volatility. And this is, again, remember when we went from like a $300 to $20,000 in a year and a half period. Effectively, it was an enormous growth. So to find relative stability in such an early asset here is actually quite profound, I think. But I don't know if most people recognize that. This can be a really powerful potential technology, and as people are witnessing, it allows you to transfer value across the world, whether banks are working or governments will let you or not. It's effectively awesome. Now, again, the on and off ramps might be a different story, but the asset itself functions like this. So that's a very unique value prospect when in history we look back and largely the governments are playing malfeasant characters in the theater. So anyways, I thought that was kind of a fun way to look at what an accumulation cycle looks like. Again, here from 2020, we had an accumulation cycle basically of 1,100 days. And then we had an intermediary accumulation cycle too. So you could actually measure two accumulation cycles here. You can measure this first one as an accumulation cycle, which was only 161 days, before you saw a secondary reaccumulation cycle after distribution. But ultimately, I think it's best to just look at this as the entire accumulation cylinder itself. This whole idea here for Bitcoin, this area. It's a little messy, but nonetheless, I think you guys get my point. So today, just to kind of close this off, we're big fans of the play to earn space. I wanted to use Axie. Try to ignore the fact that the chart is so colorful right now, and what we want to do is just highlight two key points. We're going to move my face over again to this other side. Hopefully that works. We want to look at the top of the bar here, the relative strength index, and we want to point out what appears to be a bullish divergence taking place. So here we see equal lows on the price and a higher RSI. So this is usually a bullish indicator, and the fact that we're seeing it on the daily is also quite strong. We could probably get rid of this and clean it up a little bit. But the other idea too here is that we're actually seeing this in a few other of the play to earn sector spaces as well. So both Polis and Alice have also done this, although it's probably a bit more noticeable on Polis. I was definitely, ladies and gentlemen, in early venture capital, don't take too big a position too quickly. We need to always think in multiple year time horizons. Otherwise, you're dealing with liquidity changes that can be abrupt, effectively. But nonetheless, price is down around 70%, which is huge. Bitcoin was at around 50 or 60 from its previous all-time high. So most of the altcoin space, or my favorite part, the play to earn sector, is down significantly. But here again, we have one lower RSI with a higher price point and a higher RSI with a lower price point. So this is what's known as bullish divergence. And we're actually seeing this in a few places. So these are not the only places. We'll clean this chart up a little bit so it's a little easier to see. I'll actually even get rid of the 3-day moving average too. Okay, so here's what the bullish divergence will look like, and I'll draw it with kind of two distinct lines so we can see. Here we are again. So this is what we're doing here is just looking at kind of side confirmations of bullish. So here we have falling price, rising RSI. See how they go the opposite direction of each other. We see the same thing in Atlas as well. We have a rising RSI and a falling price point. So these are usually what look like, at least at this kind of later time frame here, a falling wedge. Whether we get that or not will be hard to say. I'm not gonna make a bet on it, but based off what we were just talking about with Bitcoin, the understanding there's such huge players here, the idea that play to earn is an on-ramp to financial services, I think our thesis stands pretty strong that this idea of a reaccumulation process now in the middle of the bull market as then into a continuation of the bull market is really the most likely event. So super excited about that. I think it's going to make this market really easy to navigate. Just basically keep buying. Makes it quite simple, which should actually almost always be your kind of mantra. Heads I win, tails I only lose a little, and then just measure that out through time over consistent investments. Like we went to a Zouk dance class the other day. That was a great investment. Going to have to do it a bunch more on a monthly basis for there to be the reward and payoff that I want, but it's definitely worth it. So we're going to today take a look just at a few of the thoughts and questions that came out of the Bear Den. There's a few questions about venture capital investing and how business or companies invest effectively. And then also, what are some TA models you believe in? So I don't know what we mean by TA. I'm assuming technical analysis. I try to remove as much of it as possible. I know some of the charts look messy, but generally speaking, just these Wyckoff accumulation ranges, the vertical line or these 45-degree line basic are my functioning regression lines. So they show points of resistance and support. You can see how they operated here. And from basically you take the bottom rising supply line and you just measure that out at each broken line. So if we go back, actually this is kind of a fun question to look at just from a retrospective point of view. If you go back, we were really bullish about Bitcoin between May, June, July, August, September, and for good reason. As you can see here, we actually got this one stunningly right. We were much better at finding bottoms than we are tops, which is fantastic. It's a much better place to be. It's a much better place to be a bear in that moment too, because you know when you're near the bottom. But here again, we saw this kind of mid-range accumulation cycle as part of the larger accumulation box or trading range effectively. So just this trading range is so valuable. These rising regression lines are also helpful because they will help kind of give us our next peak. We liked using this, and again, Bitcoin went well above that peak two times, right? But we see the majority of the trading range itself is actually within that regression line. So it's actually operated quite nicely. Now, again, there are other things that we can use, but fundamentally, we just try to look at it in two processes. Are we in an accumulation or distribution process? And we talked about this multiple times too, is that it's actually not so clean. It's usually an accumulation process followed by a reaccumulation process and then some type of distribution. And then something that goes pretty similar like this, and it'll be a reaccumulation process. And then who knows how long it takes before it goes higher. It does something very similar. So this idealized idea of accumulation and distribution, as the red line looks here, I think it's actually probably a bit more like this. You get up, reaccumulation, and then here, boom, which is what we're seeing now. I actually believe that this is the mid-range accumulation cycle. We talked about this a bunch back in June and July of 2022 because we thought this was going to go quite high, and it did. We thought it could go as high as 100,000, and it will, but not within this trading range effectively. After this trading range develops, and we start to see this process finalized. Now, again, it won't be idealized like this. It's like finding a footprint of an animal. It's roughly like this. It'll look something like this. And if we compare it again to the S&P 500, the S&P 500, the blue one at the top here, it just continued onwards and upwards and out of the trading range and never came back down afterwards at all. Not yet, at least. Now we don't have enough future data, which is none. So the other thought about venture capital, I think, is just really about understanding how these theses exist, because it's a lot more philosophical than it is about just investing, at least from the ones I've recognized who are good at it. So with that in mind, your skill set, if you're a developer or maybe you're communications, you're a network or connector, you're looking for really powerful ideas that need help or money early and working to help or provide capital effectively. So that's a pretty simple answer, but you can do that in any field as well. It's a really strong idea to just go, if you're interested in any sectors, just find out if you can help and then work to help in that area effectively. It's a great way to go. Found myself entry to learning a few things that way. Anyways, follow us on Twitter, follow us on YouTube, all that fun stuff. I'm ultimately bullish. I've just been saying the same thing. I know it gets a little boring, which is just buy on a monthly basis, that which you can afford to schedule into your budget. If you want to make extra large investments, I would break it up relatively similar. You get time in a market. There's no rush. And the better you can map out a strategy, the more successful you're going to do. And that's the best advice I can give for the day. Anyways, Tea with the Arcane Bear. Thanks for your guys' thoughts and questions. Enjoy the week. We're going to, hope you guys have a great week. We'll see you on the next one.